Alright guys, welcome back to the channel, and if you're new, thanks for stopping by. Make sure you hit that subscribe button now as each of the day's analysis builds upon the previous day. Today we're looking at the potential of a bubble forming here for BTC. We've seen the largest correction, $5,000 yesterday for BTC since the big breakout on the 6th of November. So naturally, this leads a lot of people to question the position of the market, question where they currently sit with their portfolios. So we're going to review this and reflect on previous cycles as well, as what I've seen now is very similar to what we've seen in previous cycles. So essentially what happened back then. You're joining me, Jason Pizzino, on your home of macro cycle analysis. Been trading the markets for 18 years, getting into the stock markets in around 2010 and then crypto in 2017. So hopefully I can share some of that wisdom with you in today's video. Link in the top of the video description, Black Friday sale. Now I'll show you what you get with TIA Premium later in the video and that big Black Friday sale coming up. But first up, let's hit the agenda. This is exactly what I look at every single day when I review the markets, which then allows me to position myself for the rest of the day or months, weeks, wherever my trades are at. I look at it like I'm studying something. I'm studying the markets every day. And if you were to study them yourselves, or maybe you've studied other things in uni, you'd probably go down a similar path. You have a very strict criteria and a regime that you like to implement in order to hopefully get the best results for yourself. So that's why we come back to pretty regular things on the channel. Now, just before I kick off the agenda, this one came to mind today, especially as we potentially head into this sort of bubble territory. Markets can remain irrational longer than you can remain solvent. So although it might seem like we're in some sort of bubble territory, these things can keep going on longer than we can anticipate. So I think it's an important one to remember just before we get kicked off, because, well, we've got the macro cycle to get through, market sentiment, breakout or breakdown, long-term and short-term as well. Just a quick reflect on some of the major rules that helped us call previous tops in the market and previous bottoms in other markets. The bubble, of course, so more on the Bitcoin analysis. And a big one here, this last half of the video is basically dedicated to altcoins, looking at tourist traps. Don't let this trigger you just yet. There are some really, really good trades to be had through many of the crypto tourist traps, but I'll explain what that means a little later in the video. So first up, macro cycle. I just reflect on this every day. This is where we currently sit. It's a winner's curse. It's crazy to think that the markets can keep going up higher and higher. That's the house prices, so the real estate and economic cycle, the 18.6-year real estate and economic cycle, heading into the peak, roughly around these dates. Of course, we have plenty of signals on the chart to help us identify closer to that time. But after this, I think we go into some sort of significant correction. Okay, so we have the S&P 500 and the indices to have a look at just overnight. Again, nothing has changed, so this makes life really simple for us. We saw further upside here, and the market has just opened in its after hours trading on the red. You can see there, it's basically come down a little bit. As I've said this entire time, there's no stress in this period. Even if it does correct, basically anything below 5,100 or anything above 5,100, I don't think there's much stress to be had. I'd be a little more stressed under 57 or 56, but as long as the market doesn't break below these levels here, this is one of my major pivot points. So a big turning point there would be a break below 5,100. And if there was a break below 5,100, we would then have to reassess where we currently sit in the market. Are we going to have to grind along longer here throughout 2025? Or are we going to see a quick snapback? But for the short-term analysis, nothing has really changed since yesterday. Another day up, getting close to a top. This could be forming into a lower top at the all-time high, which could lead to further downside or more time to the downside. But overall, I don't think this is going to affect months to years. If you're looking at a sort of medium to longer term cycle here, if this does correct, maybe this is also working in with BTC and the day down that we've seen so far. Massive move yesterday, up 4.5%. It put in a new all-time high by a couple of cents. Hasn't got a clear break yet, no closes above it, but we can start to change some of the 50% levels so that we can prepare for further upside here should it eventuate, of course. But as you can see all these lows here getting higher and higher. This is your home builders ETF. This is part of your winner's curse phase. More profits coming into the real estate cycle, more profits coming into the real estate market for your home builders in the US. Maybe a particular area that you live in isn't going up, but this is looking at the big home builders. This is looking at the national averages and the prices going up for desirable areas. As for us Aussies, this has also had a kick-on effect as well. We're also seeing higher prices here in desirable areas. Macro cycle still looking good. Traditional finance looking good. Let's get over to some of the market sentiment for the crypto sphere. And what we've been using the ETF data for is a contrarian signal. Again, it's worked out very, very well. As you guys have known, hit that like button if you have seen this work out for yourself. When you get these big inflow days, they typically mark somewhere around the end of the move. We had big moves in the breakouts and big moves in the middle. This one here is the 7th of November at 18K, and then we had the top there at the 11th of November, 12,600. So here is the 6th and the 7th. The market paused, but it was just on the breakout. So you had a big breakout with big volume. And then we had the next couple here. There's the 11th, 12th, 13th. The market's basically gone flat since then. Yes, it climbed higher, but we've just now reversed back to that top. Hopefully this is all part of the grinding effect to the upside that we've been looking at, similar to each of the other grinds to the upside. Remember back here in 2023, you could see the prices continuing up. Basically for the bulls, a lot of people are hoping for bigger corrections, which don't come until later. But really overall, you're getting a lot of inflows in, but the market essentially stops basically dead. And you just get this bit of a grinding effect. They've missed out on the lower entry points because everyone's kind of waiting for everyone else to do that next move. They're all waiting for everyone else to jump on the bandwagon and start talking about it again. Google Trends has also been a fantastic tool to identify market sentiment. On the short term, 30 days, we're looking at worldwide as well. Starting with the purple line here, this is BTC. Just a little bit of a tick up, obviously because the market has dropped off. People start to search, especially when the prices go up in a significant way or down in a significant way. But overall, you can see the volume search, or the search volume for BTC, has basically dropped off here, and that also correlates to the price of Bitcoin at the moment. Not a bad thing long term, just in the short term, everything was looking a little bit overextended. Crypto as well has gone on a little bit of a drop. You see it had some peaks over the last couple of weeks and then dropped off just a touch. So nothing bad long term, just in the short term. And then we have meme coins, AI, and DeFi. DeFi has dropped off, and meme coins have dropped off a little, and also AI. But if we take out DeFi here, we'll get a cleaner look at meme coins. It was really on the charge last week, 20th, from the 19th, 20th, and 21st, and now since dropped off a little here. We're also seeing the fear and greed. So to the market sentiment, of course, fear and greed has also dropped off with that day down, but still sitting in extreme greed, which we know can last a considerable amount of time. And this is similar to previous cycles. You can go back to 2020, 2021, basically in the light green, and more importantly here for the extreme greed at the top. This period basically went for about 2 months, and you could extend it out to 4 months. Now, something that I haven't mentioned in previous videos, interesting periods like this here. So you got July, August, September. It doesn't have to, we're not trying to get the exact same periods. We're not trying to say that July, August, September of 2024 has to be like July, August, September of 2020. What I'm now focusing on is the green section of the chart and how you can sometimes get a precursor move to the next bigger move, if in fact that's what's happening now. So it's just something to keep in mind, because you can see there was the 28th of July right around till the 3rd of September, so about 5 weeks in this move. Correction, which basically resets the sentiment, which is a good thing. That's what we do want to see. Otherwise, you get into these big blow-off moves here that then run the market right up, and that was essentially the end of the bull market. You just had this sort of 3 or 4 months of extreme hype into February. March and April were also exciting. May was exciting, but you can see the excitement wearing off in the fear and greed. People were getting, I guess, less greedy. The prices were remaining at these highs, and then a big flush out. And as for Bitcoin, it didn't really go anywhere after that. So that was 2020. So I'm looking at a small pump into the extreme greed, and then a reset, and then a longer pump. And we don't have the data for 2017, but what I did want to look at through 2017 was how these moves worked on the breakouts of the all-time high, and this one is the average true range. So you can start to see how big these markets can grow, how interested people are with how big those bars move. So how much extra money is coming in to extend what used to be an average move. This is on a weekly chart as well. So looking at 2017, there was a touch of all-time high, a correction, and then a big move out. Now, the move out lasted several weeks to the upside, kind of similar to what we're experiencing at the moment. Then you had a correction, 1, 2, 3, 4, 5. Then another reversal here to push the price back up to where it was, around that $3,000 level. But in this period, and I was trading this market from about late March, early April, as it started to break out. I was still quite new at understanding these extreme moves, these extreme all-time high moves that retail markets do. And yes, I definitely got caught up in it, especially around this period here where we had the correction and a lot of people thought it was over. When you extend back, that is quite a significant move from the top. So you'd already done like 100 or 200%. But remember, Bitcoin was much cheaper. It was $2,000 or $3,000 at the time. But there was a big move, a big correction there. And that led a lot of people to think that the bubble had popped and it was over. But what we can now reflect on is that the correction came back to the 50% level. Not saying that every time it has to, but here was another prime example of how the 50% tool kept us in the game. It kept us in the trade when a lot of people thought this bubble was popping. At the time, with the bubble popping that early on in a breakout of a new all-time high, it's still considered, now I can understand, it's still considered relatively healthy because you don't necessarily have a 100% balance between the bears and the bulls, but you still have enough bearish sentiment at those times to keep the market, well, a little bit in check for a bull market. And as you'll see, as it goes on, that check becomes less and less. There's not much check left in the market when you get to the next pump. That was through July into August, and then the correction into September. The check of the bears really only lasted 3 weeks before it turned around and then went on for another big run. And then by the time you got to November, so getting later into the bull market, there was only a check of less than a week. So the bulls were way too greedy at this point, and essentially you weren't getting a long enough correction here. So checking the market sentiment, basically bringing it back down to sustain this bull market for much longer. What you did get are a lot of returns very fast towards the end of the market. So if you can imagine measuring this from, say, 5,400, or if you want it from the close there around 5.9, call it around number of 6, in a matter of weeks, 1, 2, 3, 4, 5, you basically run all the way up to $19,000 to $20,000. So a few 100% move from that low to that high, 260% move. And the average range really did get out of control. So I referenced this part because if we start to turn into that, if Bitcoin's price now, or the price action starts to turn into 2017, keep a lookout for, one, these checks and how long they might last. In this case, that was about 5 weeks, but we'll measure the time to the upside and then split that in half for the downside. So taking a quick look at that now, low to high, there's about 11 to 12 weeks, and the downside was about half that, which is really positive. It's a nice balanced market. You got the half way to the downside for time and price, so that's a good check of the market, and then you get the move back to the outside. So you're able to then see that although that the people are thinking this bubble is going to pop, you got 1, 2, 3, 4, 5 weeks to the downside. You should hopefully be able to stick with your positions because nothing has essentially changed. You're still in a strong, healthy market here. You've had a correction. The market does turn around. You haven't seen any breakdowns of the 50% level or back to the previous tops. You did, however, see a breakdown of the swing chart, which could be an exit signal, but it allows you to get back in when the swing chart breaks back above. So they're the sort of things that happen in the bull markets. The volatility increases and the swings get a little bit choppier as well. Sometimes they get nice and clean. Other times you just got to be prepared to get out then back in, depending on your style of trading, whether you just want to hold in there. The other thing that we saw was a slow climb up on the average true range, which is kind of what we're seeing now. So if people are thinking only back to 2020 and 2021, where we basically just shot up to the moon and then it died out, this actually is looking a little more early days. I say early days because we still don't have enough data here. It's only just broken out to new all-time highs again. You can see this sort of grind up and basically how it just kept going that entire time with a few good checks in the first half. And then by the second half of it, it was just an absolute, I don't want to say it, but yeah, basically an absolute shit show of bullishness and greediness into that peak. So hopefully I've been able to help you out or answer that question. Is the bubble popping? It'll pop if it breaks back below previous old all-time highs and if it was to break back below 50% levels. Where are those 50% levels? Probably another fantastic question. At least in the short term, you got $83,000, but I would be more inclined to use the major one here because we are looking for major turns if that were to be the case. And you can see that the major 50% comes out almost dead on the previous old all-time high. So that's another good point for a market or a price cluster to then help us identify whether we would see a true breakdown or a false breakdown. If the Bitcoin price does break down from 93 and then also $88,000, $89,000, provided it remains above the tops, we're still in a healthy position because we are above the major 50% level from the August low. So the market could get fearful here, but I don't see it as a negative to the overall move. I see it as a net positive because we should be resetting the sentiment, clearing out some of those extreme greedy bulls, letting the bears have a little bit of a win, and then we just basically turn around, leave the bears behind, and leave those greedy bulls that essentially couldn't maintain their positions, and they get a little bit too emotional at those turning points. Next up, so moving on from that, we have the USDT dominance. And just a quick look at this as we've been covering it now for a while. We did have a move back up to exactly the bottoms of, well, the support levels before it broke down. So again, we are back at 4.2%, tackling the 4.2% again. Should we fail from here, that's going to be a good thing for Bitcoin and alts. If it's able to hold and go on a bounce from this point, well, that of course is going to be not such good things for the bullish price of Bitcoin, basically the price going up. You'd essentially see the price going down in a roundabout way. So while the USDT dominance pauses here at around 4.2, we're also seeing the total cryptocurrency market cap pause. However, the good news is that it's above the old all-time high. So you still want to see this thing remain at least, we want to see it remain above the old all-time high and at least above the previous zone of resistance being around $2.6 trillion. So even if this happened to fall and we got a big move up from the dominance, people taking profits, ideally you don't want to see it back below about 2.6 trillion. So still in a healthy position, even with this correction. So as I said, we're just answering the old question of, is the bubble popping? We haven't seen any signs of it popping yet. What I am seeing signs of, however, are some strength here. So we're seeing a lot of strength signs with a bit of a short-term pause. But in the case of ETH, we're up to 9 signals and counting that ETH is in a stronger position again. It is lagging some of the other altcoins, but is in a stronger position again. And I'll get through those in just a sec. I just wanted to remind you guys about the Black Friday special. This is what you get. You get a ton of courses. You get the free Discord community as well. You can access through your TIA dashboard. Now they're laid out in a way that you can go through them piece by piece to put your own trading and investment plan together, whether that's for cryptos, stock markets, long-term or short-term trading or investing. We've got you covered there in TIA Premium. Also, the TIA Indicator Suite is on Black Friday sale as well for TIA Premium members. Within the Indicator Suite, you get the TIA GAN Swing Pro, you get the forward returns tables that you see me look at and reference here on the channel, the predictive cycles that helped us identify 2023, 2024 market movements, plus the Fear and Greed Index, Bitcoin dominance, and the total cryptocurrency market cap, the true altcoin market caps. If you are not on the email list, make sure you do that. This link was the top of the video description. There it is, name, email, click a box here, click a box there, hit subscribe, and you will get that email in the next few hours, actually. It's Black Friday starting today. Okay, so that brings us to the altcoins. Now, we've got the true altcoin market caps, Sol versus ETH. Someone asked for that yesterday, altcoin analysis, and then the tourist traps. But first, for ETH, accumulation seems to be happening. I know it's slow. I'm not trying to make excuses for how poor ETH has been doing through this entire time, but I do want to show these strong movements to the upside, basically the strength that has been building here. So we can see it's the low has been a higher low from the June low, another higher low on the banking crisis, another higher low in September. We got the breakout through those tops in December, another breakout through the 50%, this 50% level here, up to the top. Came back, made a base at around $2,800, $2,900. It did break down, so a sign of weakness there, whereas other markets weren't breaking their lows and they weren't breaking their 50% levels, Solana being one of those. But we did get a higher low form again, nice monthly higher low above the previous tops, and then you didn't see any monthly closes below the 50% level that was created from the bull market. So this is the bull market from 880 up to 4,100. Now, provided ETH remained above $2,100, there was no reason to believe that it was going to come back and test the $1,500 lows. It did hold above 25 on the monthlies for 3 months there, which is a good thing, although slower. But then you saw another strength move here and break back above the 50% and those previous lows at $2,800, $2,900. Now, with about 5 days to go in the month, we've seen it break above 3,100. And ideally in the next 5 days, ETH should close above $3,100 for that confirmed 9th sign of macro strength. Now, if that happens, I suspect we could go on another move like we've seen in the total cryptocurrency market caps. You can see it's had a similar sort of move here. It's had 50% level holds, but it has been stronger overall because Bitcoin has been stronger and has had that move. I suspect that ETH is on the verge of this next move, but how is it going to happen? Maybe some other good news that comes out about volume on the dexes, maybe some other news about memes on ETH. I don't know. I don't care because I've already seen 9 strong signs here, 9 signals of a strong accumulating market. If this wasn't going to be accumulation, we would see breakdowns of these 50% levels and closes under $2,800 to begin with, and then we can focus on the next levels. So for now, we have seen all of this extra strength, but to get it to that next point, to continue with that trend, we're probably going to see any sort of news pieces come out to suggest that, well, ETH isn't dead anymore and it's going to keep pumping from here. And if you are going to take profits on ETH this time through this cycle, make sure you've got it written down on a plan. Of course, you can always check out TIA Premium. Lots to do with creating your own strategies, your own protocols for your trading and investing. 9 strong signs. That doesn't mean that it's out of the woods here and it's going to overtake Solana. Solana is still in a very strong position. Which one should you have? I guess the end of the cycle will absolutely tell us. But if I had to pick only one, Solana is still in a stronger position. That does not mean that ETH can't come back from where it is, but Solana is now closer to its all-time high and has tested it. That's a brief look at Sol versus ETH. If you want me to make a longer video on that particular topic and say other altcoins versus other altcoins, let me know in the comments section down below. I'll leave that pinned comment there. I want to hear from you guys. And of course, like the video as well, so I know that that's what you want to see. So let's jump to the tourist traps here, looking at the retail tourist traps at this phase of the cycle. Now, the first thing I want to mention here is the lows and where I'm going to reference the market from, and how you can avoid being in the tourist trap, the crypto traders tourist trap, and how you can actually make money from being in the tourist trap phase of the market. So maybe you're not a tourist yourself, but you're actually just trading the markets. This was one of the calls that I made in February of 2023, also talking about it at the lows. You guys remember that. Just looking at how the markets form these lows and what happens from that point. Basically looking at returns and looking at better asymmetric risks. Lower risk, higher reward. We can now establish that Bitcoin has done 540 odd percent to the top, and to the current price is around 510%. So if an altcoin hasn't done that yet, doesn't mean it can't do it, just means for 2 years, it is a way higher risk to hold that coin than to basically just get into Bitcoin. Bitcoin is the lower risk option here. And from what we've seen in this cycle, Solana has also been a much lower risk option as well. So what I'm going to do is look at it from cycle low, so that November period in 2022, to identify which ones have been stronger. And this is something really, really simple that you can do for yourself with your own altcoins. Now, looking at the lows, you can see here, December, we've got the Bitcoin low. That's where the cycle low starts from, around mid-November. Bitcoin is up roughly around 480% from that closing price, so not from the low. That's what you've got to look at here. These are closing prices. And then the pink line at the bottom is ADA. So ADA is up 210%, but it did the majority of those gains just in the last 4 weeks. Otherwise, it was at a negative to zero from that point there, from that low. As for Solana is up 1700%. So you really got to ask yourself, what should I have done at the lows? Basically, what could I do better in the next cycle rather than hanging on to the possibility of something going up? On the flip side, depending on what type of trader or investor you are you holding these things in the hopes of them going up, or are you trading them? Because anyone that's bought, say, ADA and any of these tourist traps in the last 4, 5, 6 weeks, maybe even the last couple of months, as we'll see in a moment, they've been fantastic trades to the upside when other coins might not be doing so much. So that's something you got to ask yourself. Are you short term, maybe on the hourlies, dailies, weeklies, or are you longer term and you've been holding some of these tourist traps since the last cycle? If you made it this far in the video, thank you very much. This is kind of that period where you start to learn something extra about your own portfolios. And I thought I'd give a little mini masterclass to give you a bit of a taster as to what we do in TIA Premium. Now, this is just something very quick and simple that I can show you here. And we're just looking at how to judge your portfolio of altcoins against BTC. A nice, simple, easy exercise. Where I'm starting from is the cycle low. So you can see here, you've got November 2022, so around the low for BTC and the total cryptocurrency market cap, if I'm not mistaken. And essentially, you're just looking at your altcoin against the Bitcoin value. Bitcoin from that point is now up about 480%, 15K up to wherever it is now, 93 odd thousand, 94,000, right? As for ADA, the low in USD value is around the 30-cent mark. So it's currently at 97 cents. So in terms of percentage, you're looking around 30, 31 up to where it is. It's about 210% up from that low. So you can quickly see that Bitcoin has far outperformed ADA by almost double. And that's why you're down now by 50% from that midpoint. If the ADA BTC pairing gets back to that midpoint, then and only then are you now equal to the Bitcoin gains. So if this week ADA got back to the 0 point here, then it's been worthwhile holding that because you've now received the same gains that Bitcoin has had through this last 2 years. The only drawdown here, the only negative point for a portfolio or managing your own portfolio is that you've had to endure a lot of risk in this particular altcoin because it may not have come back to that. You can see this has been on a steady decline for about 2 years or even longer actually, but I'm just using the starting point. If you do see ADA run up here against its BTC value, get back to that 0 point where the cycle started from, maybe you take some profits, maybe you don't. You know, it's entirely up to you. Maybe you think this is going to continue up and you're going to get in front. So anything above the 0 point, you would be in front of the gains that Bitcoin has had throughout this entire cycle. But you've had to endure a lot of risk, very, very high risk. Another example is XRP and BTC. Anything at the 0 line is equal to Bitcoin's gains of 480%. But for now, XRP is still down 26% to be equal with the gains that Bitcoin has had. Not saying it can't do it. It looks like it's on the way to try and do that. And anything above it means you're now in front. So the best moves here are to get on with the trend when the trend turns up. And so any of these traders that have been in the market for the last 2 or 3 weeks, maybe the last 4 weeks, they're the ones seeing the gains from XRP going up, and they haven't had to endure any of the risk to the downside of some of these coins never coming back. And I get that. Some people think that that's stupid, that these coins will always come back. But there are plenty of cases that they haven't. I haven't even looked at this one. I suspect Sand is one of those that is never coming back or at least for another cycle. It is still down 80% on Bitcoin's gains here. So it just hasn't even come back. Even though last week it did 100% from that low, it's still 80% down from matching Bitcoin's gains from this stage of the cycle. You can see going back to the lows there in November. So keep that in mind for your portfolios moving forward. It's something that you can use for future crypto altcoin cycles, or even comparing any of your stocks together. You just want to see that you're continuing to move money into stronger positions as opposed to weaker positions. And so if you enjoy this and this is how you want to continue to build your portfolio out in the future, I do suggest getting into TIA Premium. You're going to get more of these deeper dives for your own portfolios to be able to make these decisions. The Black Friday sale begins today. Make sure you're on the email list to receive the coupon codes. Guys, thanks again for your attention. Like and subscribe. I can't imagine anyone that's been here for 40 odd minutes hasn't subscribed already. But if you have, let me know in the comment section down below, and I'll see you guys back here at the next video. Until then, take care and peace out.